My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends? I'm just trying to make you money. My job is not just to entertain, but educate, teach, put in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Look, I'm trying to be Jimmy Chill, but I keep seeing people say the dumbest things, and it is beginning to drive me nuts! This morning, it was some analyst talking about how you can track every move in this market by watching the Fed and the money supply. I don't know whether to laugh or cry. Tears of a clown. After sedate day where the Dow edged up 39 points, S&P gained 0.22%, record close. Nasdaq advanced 0.15%, also to notch a record close. This whole notion of the Fed as Grand Inquisitor is so out of touch with reality. With the trench warfare of the moment, you know what? Makes me want to gag. You don't want to see that. Forget the big picture stuff. There are two things you need to keep track of when you're picking stocks right now: the sector and the company, which includes the people running it. You want sectors that are in bull market mode. And while following the Fed can help, it's telling you a small portion of the story. You want to stay away from underperforming groups and battlegrounds and just go with what is working. Buy, buy, buy! So, let me show you how to do this. Let me show you how to apply this two-pronged test with some examples which can make you some money. Start with the semiconductor stocks. They are in raging bull mode. Now, there's a host of great ones to choose from. I'm not going to fight any of them. I think NXP, that's for autos, the dominant maker for what we need in these cars that's so in demand. Qualcomm, got to the cell phone. Marvell Tech for 5G and high-performance computing. They call it HPC. But I prefer AMD and NVIDIA because they make incredible products and they have fabulous leadership. And at AMD, Lisa Su is closing in on the biggest deal of her life, the Xilinx acquisition, which will help the company diversify away from just gaming and computers. That way, AMD will no longer get dragged down every time Intel says something negative about the CPU business, even when it only seems to be raining on Intel's side of the street. As for NVIDIA, I like to call CEO Jensen Huang a modern Da Vinci because he is a Renaissance man, a painter, a draftsman, a scientist, an engineer, and an architect. The only differences are that Da Vinci never wore a cool motorcycle jacket and Jensen never stole cadavers to study anatomy, as far as I know. As I told members of the ActionAlertsPlus.com club on our monthly call today, if NVIDIA can purchase this ARM Holdings, if it can close on it, it will become the most important semiconductor company of our time. It's already pretty close. Did you notice that the government's using chips from AMD and NVIDIA for its supercomputer as it awaits Intel's delayed product? Doesn't that say it all? Next up, housing's in bull market mode. Boy, isn't that incredible at this stage of the cycle? Because there's so much demand from millennials and from hybrid workers moving to the suburbs. More demand than the home builders can ever meet. I know the group trades on interest rates, but longer term, it will trade on the demand for homes in a country that's been underbuilding for a decade. The home builders with land, the best land, like Lennar, and more important, Toll Brothers, which is on tonight. That's how you pick a long-term winner. They need the land. Third, what an incredible bull market for the financials. Goldman Sachs, Morgan Stanley, JP Morgan, Wells Fargo, Bank of America, you name it. Did you see this trade today? They are trading like small caps when huge buyers come in all at once. Why? Because they're incredibly cheap, and they could be just a few months away from a new rate hike cycle. The banks buy back stock all the time, hand over fist. And why not? Relative to the rest of the market, their stocks represent the greatest bargains in these stocks these days. But look, it's easy to like Goldman Sachs, right, which trades their ridiculously low single-digit price-earnings multiple. I don't even understand that. And that's even after its 56% run this year. Crazy cheap. Same goes for JP Morgan, cheapest I've ever seen it relative to the group, up 3.25 today. Hey, you know what? I say go with Morgan Stanley or Wells Fargo, the best and the worst. Morgan Stanley is not a bank anymore. It's a wealth advisory service that happens to do some investment banking on the side. That means it's bank light. I like that. Wells Fargo was so horrible, you have to wonder why the heck Warren Buffett stuck with it so long for, of course, selling near the bottom. These days, though, it's a turnaround story. I believe in the CEO, Charlie Scharf. He's tough as nails, and he's done playing defense by fixing everything from the board of directors to his direct reports. He's now on offense while buying back a massive amount of stock. One day, I expect Wells Fargo to return to the high 50s, where it was when all hell broke loose. Until then, just stay the course. Fourth, I really like the bull market in retail survivors. Is it too late to buy something like Dick's Sporting Goods, which was up 130% for the year now? No, not. It's giving you a special dividend while you're laying out a multi-year strategy, and based on that plan, the stock is cheap. Still, I prefer Best Buy, which spent a fortune on digital and has a membership club that will take care of all your home office tech support needs. I'm also drawn to Bed Bath & Beyond. That's up 62% for the year because this is a turnaround story. And what I've seen from the looks of that flagship store in New York, oh my, you're going to want to have a lot at these places. This is coffee. They have all the tech you need in terms of shopping and buying. But what they really have is something I like to call whimsy. Something that you could only really find at Costco until recently. I think CEO Mark Tritton will take Bed Bath for a multi-year run. It's so galling to see that GameStop remains the most beloved stock among the memesters who want to bust the short sellers. Hey, listen, memesters, which I know you're glued to every minute because you keep making funny drawings of me that aren't that funny. GameStop only has an 11% short position. Bed Bath has a 22% short position, and they're all fat cap kleptocrats and plutocrats, and they hate you. Okay, how's that? You get it going? Maybe that's the problem. It's too good to be a meme stock. Fifth, the most unknown bull market is agriculture. Anything ag, from machinery to fertilizer. I've long been a fan of AGCO. But that Deere conference call last week, magnifique. I scoffed at Kathy Wood, the best money manager of 2020, when she said she was buying Deere for its tech. I owe her an apology. I apologize. She nailed it. The technology Deere talked about is truly revolutionary. It will save farmers billions of dollars in wages because everything's pretty autonomous. Deere's still a buy. Finally, there's a bull market in what I'm calling responsible energy. Oil companies that have gotten disciplined about spending money while also being a lot more eco-friendly than they used to be. If you want to buy prudence, you buy Devon Energy or Pioneer Natural Resources with those nifty variable dividends, not to mention balance sheets that are the envy of the industry, even as Pioneer's a very smart acquirer. If you want an environmentally friendly oil stock, that's no longer an oxymoron because we've got Denbury. I am blown away by what they're doing with carbon capture. Get used to that term. We're going to adopt it. We know ExxonMobil has gotten religion on climate change after those insurgents captured some board seats. You know what, guys, listen to me. Hey, Darren, you watch the show all the time. Just go buy Denbury, man. You're going to be a hero, all right? There, I said it. And that's even with Denbury up more than 170% year to date. I'd still be a buyer. Darren, you should be too. Darren, of course, I'm referring to the CEO of Exxon, who I am not on a first-name basis with, but he's a terrific guy from what I can tell, Darren Wood. The stock never should have been so low in the first place, and therefore I think, Darren, this is your chance, okay? Vindicated. You do not even have to thank me. That's what's so great about being Jimmy Chill. The bottom line, you can listen to the Fed-obsessed experts and wait for the grand poobah to come from a virtual Mount Teton, or you can forget about the money supply of the central bank and just run with the bulls. It's not like they're hard to find in this fabulous market. Thank you, Johnny Gilbert. I don't think I can do it, right? Because I'm not Faber. Is it the hair? What is it? Manny in Florida, Manny.
Jim, booyah, booyah.
Booyah, booyah, booyah. I'll see you too, booyah, and raise your booyah.
Thanks for helping us all make some money, and you're very entertaining doing it. I mean, what a show. All right, so Starbucks, the feel-good morning drunk, all right? So I think this is the key in this business. Margins are great. They continue to beat earnings. As a brick-and-mortar business, they prove to do an outstanding job right through COVID, and they even – it's come down in the past month, but something you said brilliant last week, one of your segments, buy into companies that go through price increases, and it wouldn't matter. Starbucks can raise the prices tomorrow by 10%. Who would even blink? It's coffee.
Nobody would. Nobody would. Yeah. That triple venti cappuccino with skim wet, I'm paying $5.54 for. I can pay $6.22 for. I wouldn't even care. I think you're dead right. Starbucks at 115 is a buy. Right here, right now. Hey, mark that down. Manny in Florida got horse sense. All right? Now, if you want to run with the bulls, you need to keep track of two things when you're picking stocks right now: the sector and the individual company, meaning the person who runs it. You want to pick from sectors that are in bull market mode, and these stocks right here all fit the bill, especially Leonardo da Vinci. No, Jensen Huang. Okay. On Man Money tonight, Salesforce reported after the bell. So could the force remain strong amid the company's push to compete with the likes of Mr. Softy? Don't miss my exclusive with the CEO. And in his latest earnings report, Toll Brothers proved that demand is still strong. So why don't we check in with the top brass over at that company? And it's Snowflake. It delivered earnings tonight. Stock started lower. Then it started to levitate. And why not? Is Frank Slootman the best of the best? Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.